markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 3:40 on Wall Street. We check the markets all day long here at Bloomberg. I'm Denise Pellegrini. Stocks rising. That's as in traders waging the worst of the banking turmoil is possibly over, though. I should also mention gains paired in the afternoon trading after that Russian fighter jet collided with that U.S. drone. Treasuries fell. And investors also speculating a bit that the rate hikes might be easing. Ira Jersey, chief U.S. interest rate strategist for Bloomberg Intelligence, says the bank failures do signal the end of major Fed tightening, but he says don't expect the Fed to go into reverse over this.
I know that there's at least one or two banks out there saying that maybe the Fed's going to cut interest rates because of the financial stability issues. That's not going to happen. They're not going to cut. Much more likely to pause and then say we might restart hiking later than they would be to actually lower interest rates.
And that's Bloomberg Intelligence, Ira Jersey there. The Dow right now up 135 points. That's way lower than the 400 or so points we were higher before, but still up about 0.4%. The S&P 500 up 0.9%, 37 points, and the NASDAQ up almost 1.4%, 154 points. The yield on the 10-year right now creeping still a little bit higher, 3.64% right now. NYMEX crude, though, it is plunging down 4.57% to $71.38 a barrel. A lot of discussion about supply and where supply could be. And also investors looking at that CPI data we got with February down from January, and some investors seeing that maybe as a sign that inflation is easing a bit. Job cuts at Meta. Shares are up almost 6% as investors reward the new austerity there. Meta announcing it is cutting 10,000 jobs. That's 10,000 on top of the thousands that they've already cut. And the Facebook parent also saying it is doing away with 5,000 open positions. And Apple holding back as well, delaying some bonuses at Apple. And that is a Bloomberg Business Flash. Carol and Damien, back over to you guys.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just about 17 minutes left in today's trading session. Denise just giving you the lowdown when it comes to the equity and the Treasury trade. Bouncing around a little bit, definitely off our highs of the session when it comes to stocks, and we've seen some volatility once again when it comes to the Treasury trade. Let's get to it, because lucky for us, Damien and I have with us Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams. Gina is on the phone in New Jersey. Gina, good to have you here. I've been thinking about what your rethink has been, if any, when it comes to the trade that we saw over the past week, on Friday, on yesterday, and when it comes to the health and overall direction of the equity markets. What are you thinking about? What are you studying?
Well, I think the most important thing, Carol, first, thank you for having me, but the most important thing that I'm watching really is the market technicals. If you think about it, as of 2 weeks ago, the only thing really going for the market in an environment where fundamentals were deteriorating and valuations are still quite high, considering the level of interest rates, is that the technicals were in support of some version of recovery. And over the last couple of days, we've definitely seen the technicals break down. The small cap index in particular has weakened materially below some pretty key moving averages. The large cap index is hanging on, barely with its fingernails, but still hanging on to that 200-day moving average and testing that level with a little bit of a bounce back today. So the technical picture is not as bad in large caps as it is in small, but certainly we're teetering on the brink of testing some key technical support levels. And I think those are important to watch, considering certainly this doesn't improve the fundamental outlook. It might change the landscape at the Fed, but we won't know that until next week. It really is all about how does the price trend right now.
Gina, I'm just reading this new piece of research you co-authored together with my man Christopher Kane, where you're talking about factor investing. And, we were looking at, which strategies performed best and worst in other sort of environments where you had elevated interest rate uncertainty. What stands out to you there?
Yeah, so we run the MVP portfolio, which combines the factor families of the high momentum, low volatility, high value, and high profitability stocks. So we want to really keep an eye on how that family of stocks is going to do in an environment of crisis or sort of distress in the financial sector. So we did go back and we looked at how those factors performed in the Lehman crisis, just as a representative example of really precipitous conditions in the financial markets. And indeed, the performance was pretty decent, with the exception of the value factor. Value, unfortunately, is somewhat subject to swings given the financial sector exposure that's in the value segment. That said, our portfolio, when we rebalanced it as of December, did not have any bank stocks in it, thankfully. So the value component of the financial
Lucky
sector
you.
is in the portfolio. Yeah, we got really lucky, frankly, because they weren't particularly positive screens on our factors, thank goodness. So the portfolio, once again, it looks like it's going to perform relatively well in this environment of distress.
So in terms of the technical view then, are you at a point where you're like it can go one way or another, like the odds are 50-50 at this point in terms of equities?
It's not clear. I will say, Carol, I'm watching some really key levels. I do think that October was a massive washout moment for stocks, and we run our own market pulse index that would suggest and confirm that it was a major sentiment low for the equity market. That doesn't mean we don't go back and retest that low, but it is a critical level to watch, and we're still nowhere near those levels. So that's the good news. The bad news is, though, that some of the technical improvements that we made over the course of the last several months really have been washed out over the last couple of days, and especially in the small cap index, we're back to testing our December lows on small caps. Again, still not near those October lows or even the major June lows that were made in the small cap index. But when the small cap chart is deteriorating, it's really tough to get optimistic about the outlook for stocks. And small caps have just gotten creamed over the course of the last week. So we'd like to see some stability emerge there before we can get too opportunistic about the market at large. That said, I also think, though, that if you are thinking about, individual equity investments, industry investments, sector investments, there are some opportunities that have emerged in this washout. And, I think from the standpoint of looking beneath the headline market indices, you probably will find some pretty deep values that are worth investigating at this time. It's just the market itself, the charts don't look so great. So I would say I would err on the side of caution right now.
Gina, you're talking about value. You're talking about some of the small caps. The one talking about the MVP portfolio and all these portfolios. The one thing that kind of stands out to me is the banking sector and the exposure therein. And obviously in small caps, regional banks are a very healthy portion of that index. Hence the reason it's down so significantly. Just a few months ago, Gene, we were talking as banks as being a place you wanted to be in this environment, right? So exactly. So how has everything changed so very quickly?
Well, in our models, banks actually have not been a place you wanted to be. Financials were, but banks were not. We do run industry relative models within the sectors themselves, and certainly that financials started to pop toward the top of our sector allocations, but it wasn't because of banks. It's because of the consumer finance companies that are at the top of our financial sector scorecard. And as I mentioned, it was a signal to us that no banks are even in the MVP portfolio as of December's rebalance. So for us, the banks were not the primary reason to get a little bit more excited about financials. The reason to get a little more excited about financials are the lenders to consumers, where consumers are still borrowing and borrowing even more at higher levels of interest rate, but yet not likely to default. Those companies are the companies that are likely to experience the most upside in that kind of climate. So, I think that financials is a really big sector, and you definitely right now have to look beyond the banks to get excited about anything in financials. Small caps are exposed, but maybe we're overstating how much small caps are exposed. I'm actually worried about the smallest of the big cap stocks when it comes to the banks, because that's where you've seen the deposit growth. That's also where you've seen the regulatory landscape really shift.
All right, going to leave it on that note. Always great insight. Gina, thank you. Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence, joining us on the phone from New Jersey. If you're lucky enough, you can check out her research. It is on the Bloomberg terminal. All right, we've got about 10 minutes left in today's trading session. I'm looking at a 2-year with a yield of 4.2. Carol Massar, Damian Sassauer. I know.
Unbelievable.
This is Bloomberg.
your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. We're carrying all the company news for you here on Bloomberg. And Meta cutting 10,000 more jobs and doing away with 5,000 other vacant positions. Dan Ives, senior equity analyst at Wedbush Securities, says Mark Zuckerberg is moving away from ambitious plans for the metaverse after investors perceived the project was hemorrhaging money.
Look at the metaverse strategy. When you look at what they're investing on, it's good money after bad. And I think this is
its current hiring freeze to include more roles. A lot of volatility in treasuries, and now we're hearing that B. Riley Financial cut staff on its fixed income desks in recent months, changing course on an earlier expansion in the division. Silicon Valley Bank assets are being eyed by some of the world's biggest private equity firms. We're hearing Apollo Global, Blackstone, KKR are all expressing interest in Silicon Valley Bank, and Google rolling out some new AI features. This is for customers on the cloud. The internet giant trying to lure more AI startups to its services, and generative AI tools are also in the works. And those are some of the company stories we're following this hour. I'm Denise Pellegrini. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just under 5 minutes left in today's trading session. Carol Masser along with Damian Sassower here in our Bloomberg Interactive Broker Studio, getting ready for our simulcast with our TV colleagues. Beyond the Bell, we're going to talk about the market close in just a moment. In the meantime, what's on your radar?
My radar? What's not on my radar? There's only one thing on my radar. I'm an emerging market guy. It's got to be China.
Is it really that overwhelming right now?
Well, for emerging market guys, no, because I cover 153 countries, Carol. But, for this very moment, it is a bit overwhelming with what's going on in the U.S. And we have China activity data coming out overnight. And look, for me, China CPI, let's be clear, of all the countries in the world, China's inflation is running below the central bank's target. It's the only country in the world that has that going for it right now.
Do we trust the data?
We don't trust the data, but it is reopening, and we don't trust the reopening data either. But what we can trust are inventories of LNG and coal, which are the feedstock for the Chinese economy, which seem to be getting better. We can trust refined products, refined copper inventories, and things of that nature. But I think the activity data we're going to see overnight is going to be breakout. We have retail sales. We have industrial production expected to grow 4.5% year over year. Yeah, the data should be pretty good, Carol.
Yeah, NASDAQ Golden Dragon, looking at those Chinese ADRs that trade here in the United States, just up about 0.5% here, so lagging what we've seen, certainly in the bounce back on the U.S. equity side of things. Having said that, on my radar, because we did see this bring down the equity markets and create another level of nervousness, perhaps in financial markets, certainly here in the U.S. A Russian fighter jet colliding with a U.S. surveillance drone in international airspace above the Black Sea, causing the American aircraft to crash. This came from the Pentagon, an incident that ratcheted up tensions already running high over the invasion of Ukraine. What this says to me, Damian, is that you just never know where stuff's going to come from, right? You know, it was just about a year ago, right, that we saw the Russian invasion of Ukraine. It just kind of keeps coming at us.
Yeah. No, and
I don't want to get crazy because and overstate it, but it's just a reminder.
Well, I mean, look, just a year ago, I used to have to track the Central Bank of Russia, and they're meeting this Friday, and no one cares.
Isn't that amazing?
It's amazing.
I don't know. You're looking at a treasury trade that's kind of been all over the place. I mean, if you look at the last week or so in terms of the trade, right, we went from 50 basis points on the Fed, no rate cuts this year, to a rate cut this year, to maybe no moves next week at the meeting.
No landing. I don't hear anyone talking about no landing anymore, Carol.
I know, right? That's soft landing without a landing.
Soft landing, hard landing, no landing.
Well, we will know more certainly when the Fed meets next week. All right, right now, Damian and I are going to head over to our TV colleagues, Romaine and Scarlett. We're going to talk about this market close on this Tuesday. That's because Beyond the Bell, it starts right now.
Moving closer to the closing bells, we're going to get Scarlett's Oscar takes in just a moment, but we're about to take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast. We're joined right now by Carol, the mathematician master, and Damien, the earpiece sassower. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. A $500 billion sell-off in the market over the last few days, being walked back just a little bit.
Yeah, and look at this. You know, here we are with, a couple of minutes left in today's trading session. We're seeing some buying into the close. I find that fascinating. Damien and I just talked with Gina Martin Adams of our Bloomberg Intelligence team. The thing that she's got on her radar is the market technicals breaking down. She says small caps in particular, which got creamed last week, were down about 8% versus about a 4.5% decline for the S&P 500. She is watching this very, very closely in terms of trying to figure out, Damien, what comes next.
Yeah, you know, Romaine, I had to struggle to find some losers today, but Rivian, Best Buy, and United Airlines are the three that I'm talking about. I mean, Rivian's obviously seeking to end its exclusivity pact with Amazon. Shares are down about 3% today. Bed Bath & Beyond, I mean, when are shares not down in Bed Bath & Beyond, right? I mean, they amended its equity offering agreement. They want to try and raise a bit more money there. Investors aren't happy. And then finally, obviously, United Airlines slumping on that loss forecast.
You know, I'm just going to jump in with a delayed reaction to an Oscar movie that everyone hopes will sum up what's going on in the markets, which is all quiet on the Western Front. And that's not happening right now.
That was a pretty dark movie.
That was a dark movie. I'm just basing it on title alone in terms of what people would like to see, which is quiet.
I feel like our market is more like everything everywhere all at once.
Oh my gosh, the references to that, Romaine.
I think
it's all just one big trade.
Television was just talking about that there. We talk about the multiverse, and here on a day coming off what was a really brutal 3 days, I think, for the market, and really even for folks outside the market. A little bit of a rebound, a little bit of a relief. The Dow Jones Industrial Average going to finish the day higher by more than 300 points, or about 1%. The S&P 500 higher by more than 60 points, or about 1.6, 1.7%. The NASDAQ Composite is going to finish the day higher by more than 200 points, or about 2%. And the Russell 2000 in on the action as well, up about 33 points, or about 1.9% on the day, Carol.
Yeah, definitely a risk-on trade. Investors coming back into the market after some of the selling that we've certainly seen in the last 24 hours. 417 names, Scarlett, in the S&P 500 higher today, 82 to the downside, 4 unchanged.
And if you look at the performers in the S&P 500 in terms of 24 groups, all 24 of them finished in the green. Transportation just moving into the green at the very last second. This is kind of a restoration of what we saw earlier in the day, but this is all due to the fact that we had a rally in the last hour of trading, because for a while it looked like there were a couple of weak spots that were threatening to bring the market down once again. But Carol, so far we are looking at autos, semis, and media entertainment, really Netflix Meta that was driving that.
All right, got it, Scarlett. Thank you. And so let's get to some of the individual gainers in the trade today. And regional banks, we've been talking about it all day, right? Big bounce back, if you will. I think Romaine mentioned this earlier. First Republic Bank, this is number one in the S&P 500 in terms of gaining up almost 28% in today's session after a 62% drop yesterday. So rallying big time as those concerns about a wider contagion definitely eased in today's trade. Scarlett mentioned Meta. It is number 2 in the S&P 500, top of the NASDAQ 100, the year of efficiency, certainly happening. And so we know the company's been flattening out the organization, canceling lower priority projects, and then we got another round of layoffs, right? We got that today. 10,000 employees, close to about 5,000 additional open roles in its second major round of job cuts in the past 6 months. So that stock up more than 7% in today's trade. And then Uber, the gig economy rallying. We really haven't talked about this certainly on our side so far, but Uber up about 5%, but Lyft, DoorDash, Uber all jumping after a California appeals court upheld the current law classifying gig workers as independent contractors instead of employees. So a big win, Damien, for the gig economy.
Yeah, no, I jumped the shark there when I was talking about my losers. But I get to say it again, you get more of me. So it's Rivian, Best Buy, and United Airlines. Romaine is so happy that I'm talking about these companies. You know, I love it when he does this. So look, I mean, again, Best Buy, I mean, it's anyone's guess what's going to happen there. That company has struggled to find interested buyers. I know Hudson Bay was there at one point, but they just can't help finance and ultimately emerge from bankruptcy. And United Airlines, again, for me, shares down 6.4% today. It was down as much as 7+ at one point, but it's up still 21% year to date. Look, it's optimism surrounding that global travel recovery. We haven't really seen it impact China yet, but I think it's really these high labor costs. It's now the CBA with the pilots union remain. You know, I think that's really what's impacting expenses here.
Yeah, several of the airlines among the biggest decliners here on the day. GitLab finishing down 23% here as well. A quick check on yields, because we talk about, of course, that big 61 basis point drop that we saw yesterday on the 2-year yields, recouping some of that here on the day, up about 25 basis points. So we haven't quite round trip there, but it gives you a sense of just how volatile this market is. This is the Treasury market. of the United States of America. We dropped 60 basis points yesterday, and we're up 25 basis points today. There is no parallel in the modern era. And I came in, I'm a student of history. You're a student of math, Carol Masser. But we'd be remiss in not pointing out that 15 years ago, on this exact day, that was the day where we learned the Federal Reserve had basically stepped in, said they were going to give that 28-day lifeline to Bear Stearns and help them out. Of course, we know they ended up rescinding that lifeline and eventually brokering that deal with J.P. Morgan. But we're kind of back to where we were back 15 years ago in 2008. Not saying this is the same, but we talk about the similarities in market sentiment. We talk about the similarities of government involvement and the debate over whether the government should be involved. And let me tell you this. The moves that we saw in yields back then were not nearly as volatile as what we're seeing today.
Yeah, no, I think that's a really good point, right? Because it's certainly, many have come out and said what we've gone through in terms of the banks, those 3 banks that have gone down in the last week or so, it's not it's not the great financial crisis. But having said that, that volatility, what does that say to you? Is it just something about the market environment today where things can move so much more quickly, Scarlett? I'm not quite sure.
I go back to what Scott Ladner of Horizon Investment was telling us, which is if you can't tell me where the U.S. Treasury, the 2-year Treasury is trading, I can't price a stock. Don't ask me to price a stock if I can't price a bond. And that's basically what the bond market is telling us right now. Romaine, you mentioned 2008, the parallels there. That foreboding sense of another shoe waiting to drop is what I think really captures my mind.
And I did my homework on this because I went back to look at a lot of the news coverage back then. And you know how many stories, even on the Bloomberg terminal, that were basically like, everything's fine, don't worry, nothing's going to happen. These were stories literally the day before. And, I think it always sort of gives you a little pause to just understand. And Damien, I know you know this, that markets can change on a dime over the littlest thing.
Scarlett and I don't know that?
No, well, I'm trying to throw Damien.
Well, guys, let me channel something. What Romaine and I are going to have to do, we're going to have to do our binomial interest rate tree. We're going to have to model this out because what it's going to do, Romaine, you know this exercise. We've done this before.
You're giving me nightmares.
50 bips, 25 bips, 75 bips, no change. Maybe it's a cut. Are you kidding me? It looks like March Madness out there.
But I do feel like this is a market where news goes through it so quickly.
Yeah.
And you just think about, you guys, like in a week, how we can go from one spot in the markets to a complete reversal. And I just think whether it's social media, the amount of business news coverage and market coverage,
much different world.
That things go through much more quickly.
But in finance, it's always been the case that something is okay until it's not, right? Everything's fine, and then all of a sudden it's not because people are looking at it a different way. This is no different. It might be amplified by social media, and the messaging might be different because of social media, but that ability to turn on a dime, that's happened.
Scarlett, you went to one of those fancy Ivy League schools. Did you ever read Ernest Hemingway, The Sun Also Rises? Great quote in there. How do you go bankrupt?
Gradually and then suddenly.
2 ways, gradually and then suddenly. Yeah. See, I knew that. She's the Ivy Leaguer.
Let's go back to everything everywhere all at once.
Blue-collar school. By the way, I should point out the Northwestern Wild, for anyone who cares, Northwestern Wildcats in the NCAA tournament.
Are they? I didn't know that.
Only a second. Oh, exactly. You gotta pay attention. There's 7 seeds, Scarlett. Where's Cornell? Ouch.
Yeah. Ouch.
See, but look at the tone. Look at our conversation tone. It's so different from yesterday. My point being that things change so quickly in this environment. So in terms of what the Fed does ultimately next week, it's going to be what's right in front of them at the moment, right, Scarlett? Yeah. It's going to be our financial markets. Are they tight? Are they what? Like, what is it? What's going on? And that's
what's
how they're
the
going to
state of the talk in banking sectors, right? What are bankers saying? Are depositors holding on to their deposits in those banks? Are they pulling them out in mass and moving to the big banks? We have to see how this all shakes out.
Yeah, I'm going to give. Sorry.
And just real quickly, there are a lot of other shoes to drop here. Remember we had the Moody's revising their general outlook for the banking sector as a whole. You got at least six companies right now on watch for a potential downgrade.
That's because the rating agencies get it right so much?
Oh, look at you. You're such a hater.
I'm not a hater. I'm just saying why eyes wide open.
Downgrade Carol Masser.
I've been downgraded already.
Your BBA.
Ratings watch Carol Masser. There's no downgrade yet.
But I'm just saying, here's a bank that was so instrumental to the tech community, publicly held entity, and how did we miss the exposure? How did all of us?
And Bloomberg Intelligence didn't miss it. Bloomberg Intelligence, Arno Kakuda actually called. No, I'm kidding. But look, I think the one most important thing we have to talk about here is all this interest rate volatility. And Romaine, you've hit the nail on the head with that. It really isn't spreading into FX markets or equities for that matter. So that's the interesting point I think we have to look at here.
Yet, gradually and then suddenly.
Everything Everywhere All at Once.
No.
Women Talking. Okay.
Elvis.
That's enough.
Can I just keep going?
Elvis?
Elvis. Well,
Elvis was the nominee for Best Picture.
I'm throwing out
Carol,
movies.
guess what? Elvis has left the building. Time to say goodbye.
Volatility, however, in the Treasury trade has not.
Still talking.
All right.
Oh,
Are you
Damien,
done?
how do you
Unbelievable. I don't know.
Carol, the stage is yours.
People used to say I look like Brendan Fraser.
Thank God Scarlett's here. All right, that's a wrap, everybody. Our cross-platform coverage, radio, TV, YouTube, and, of course, Bloomberg Originals. We call it Beyond the Bell. We will see you maybe same time, same place tomorrow. But what I'm really looking forward to this next guest, courtesy of Damien Sassower, because I do feel like when you're trying to figure out what's going on in the outlook, you have to talk to CEOs, you have to talk to all kinds of companies and all kinds of market watchers, especially when there's so many things and so much volatility, I think, like even in the rate environment. So let's get to it, because one of the things that was key in the CPI report today had to do with housing specifically. Right?
Yeah.
Big time. Underlying consumer price growth accelerating in February. Americans continue to experience the sting of rising rates and sticky prices for services over the past year. Key housing category, which includes everything from actual rents to what a homeowner would charge in rent to hotel stays, climbed, Damien, to a record 8.2%.
Yep.
You want to do the honors and bring in our guest?
I'm going to do that. John Sim, head of securitized products research at JP Morgan. Welcome to the program. John, housing demand is weak. Existing home sales declined 34.4% year over year in January to an all-time low. What will it take for housing demand to rebound here in the U.S.?
So, hey, guys, thank you so much for having me on. It's a real pleasure. Yeah, you already hit the nail on the head with the CPI print. I mean, I think the good news is that the Fed officials, at least, are getting that it's sticky. You know, the owner equivalent rent number, which was just over 8%, as you mentioned, it's about a third of the CPI number index that comes out. So, I mean, the good news is that we're already seeing rent growth decline. And that's measured, say, by other factors. Say, like, look at Zillow as a good index, one of the ones we use, rather than the OER measure, which is really lagged, which has kind of been the burden, I think, for a lot of us, is watching how slow. It's like watching paint dry almost. And then, you know, so we do think that Zillow moderation that we're seeing will hit into the low single digits by the end of the year. But the bad news to that is that OER measure really isn't going to probably reflect that well into 2024.
Wow.
So it's a very slow process. But I guess if you're going to look at the good side, is how much could it take off of the headline CPI number by the time you get to that low single digits, you know, into 2024? It's probably about 1.5, maybe even 2 points. So it will help, but it's going to be slow to get there.
John, you know, I wonder if you could talk to us. I mean, a lot of our audience here, you know, we're based here in New York City. You know, we're only getting a small piece of the pie, but I wonder if you could talk about, you know, the United States of America, the dispersion in housing performance across the major regions. It seems to me that some of the biggest, you know, housing price appreciation declines have occurred out west. I'm talking Seattle, San Francisco, while other regions, and I'm thinking Florida, I'm thinking, you know, Miami, Tampa, I'm thinking Charlotte, Dallas, Atlanta.
I think home prices will decline by 10%. A lot of that has to do with affordability. I think one thing when we're talking regions is to look at a very interesting statistic around the percentage of MSAs where it's cheaper to rent than it is to buy. And that's, right now it's saying 99% of all MSAs, it's actually cheaper to rent. So that speaks well to the rent growth narrative we were saying earlier about why that's positive, but while we think home prices will decline, because I think we get that confusion at times where people look at rent, say, how could rents go up and home prices go down? Well, because it's actually, you know, better to rent. But the regions, say like Seattle, you mentioned, you know, they're down 15% already from the peak. San Francisco down 11, San Diego down 9. Denver down 8, but then you see places like New York, Florida only down 1%. So there, I think you have to little bit of tech, a little bit of work from home, probably from the Denver side, and then unwinding. There also had just big run-ups, but then you look at areas like Florida, where I think actually benefited a lot from the migration and work from home. It's just a lot easier to work from the beach
right.
It is. But New York, everyone loves to live here, so I think that holds up a little bit. And then we are, you know, more back in the office. I think hasn't hit as hard in New York as it has versus other areas.
John, do you start to model that? I understand it. You rent a place, you're stuck into that cost, right, for a while, and that plays into the inflationary metric. But can you start to model, I don't know whether it's a year from now or 2 years, where you get a better understanding of kind of where inflation ultimately will be? because shelter is such a big part of this component, can you start to think about when people are renegotiating some of this or a softer housing market, that it's a very different picture?
Yeah. So we got to the one part, which is just the lag. So we already think that, you already have 1.5% to 2% coming off, in 2024, with all else being equal. But then you start getting into potential negotiations of where rents could actually get a little too frothy and home prices continue to decline, where you could continue even push that headline inflation number lower for sure. We start to try to model that out. It's pretty tricky, but certainly as you start to see a lot of the renegotiation for rents, you can even see it locally in New York City, where the concessions are coming in, the 1 month free, the 1.5 month free, the free gym membership and whatnot, to try to lower the dynamics of getting you into the property.
John, mortgage borrowers, from my perspective, appear to be in a pretty solid position, right? We know about the equity buildup. We know about the low fixed mortgage rates that they locked into, some years back. But it's not all roses now, is it? I mean, if you look further down the curve, FHA borrowed delinquencies, subprime auto delinquencies. I wonder if you could talk to us about some of these more high-frequency data points and what they're telling you.
Yeah, that's really been a key for us to watch, and we've been highlighting that really even as home prices were still going up. We're saying, look for things to crack on the low end, and that is low FICO, high DTI, high LTV borrowing, and that typically happens in the FHA programs. The DTIs in those programs are around 55%, so they're basically spending more than half their income on their mortgage payment. So when things start to crack, they're going to happen there, and you are seeing delinquencies build up in that program and really in low FICO in general. So I think that really speaks to stress on the low end of the consumer range, and you will probably start to see modification programs come in to try to help save them, just like we had through the last cycle and through COVID. We've got a really good playbook for modifying borrowers when they get into trouble. The other side of it is that we watch is around subprime auto. Really what you're seeing there is the delinquencies, 60-plus day delinquencies in the auto sector for subprime, so now we're talking low end again, is actually as high as what we saw during the financial crisis. Wow. So beginning to see stress there as well. Well, as you mentioned, it's not all doom and gloom. I think when you look at those things that looks scary, you kind of mentioned it before, that borrowers are in a really, really good position. They about 80% of them have locked in a 4% mortgage rate or lower. And I think that means that they're going to fight to stay in their property. The other side of it is just the accumulated equity that they've built up in the property themselves. Like, just to put it in context, the debt that was built up in the mortgage market just post financial crisis was around 10 trillion overall for the mortgage market. The equity at that time, just post GFC, so as the home prices were going down, was about 8 trillion. So there was 2 trillion underwater, in the properties. That's why you saw all these exits, people just mailing the keys back in. But now the equity is around 30 trillion, and the debt is only 14.
Wow.
So you can have a pretty big correction, and these guys are going to stay. They're not going anywhere, which is you kind of have a frozen market now, effectively. No one really, I don't want to say no one, but it's really hard to afford to buy given where mortgage rates are. But there's not a lot of supply coming in and not a lot of supply pressure, because even from the delinquencies that we mentioned earlier, the mod programs will start to keep them from hitting the market.
So home builders don't start building, in your view?
I think they're already started to slow down their build. So you're seeing that in some of the construction data. Back to at one point the peak was all construction units coming in the market was about 1.7 million. I think you've got the total now down to 1.3. So now I think you're back to underbuilding again.
John, one more question while I have you. 20 seconds here. Look, securitized products, we're hearing about, some of the stress, some of these delinquencies. Is that filtering through into the secondary market for structured credit? Are you seeing any of that showing up in, some of these low quality credits?
I just got about 30 seconds.
Yeah, not at all in the residential sector. You're not seeing that stress there yet. The stress you're seeing is more coming just for broader credit off right now. You are seeing stress in CMBS, though. That's a whole different topic, but
yeah.
Not in resi.
Listen, great vantage point. John, thank you so much. John Sim, Managing Director, Head of Securitized Products Research over at JP Morgan, joining us on the phone in New York City. You are listening and watching Bloomberg Business Week on this Tuesday. Carol Master along with Damian Sassauer. Just a reminder of how we closed on this trading day. S&P just up about 1.7% and the NASDAQ a gain of 2%. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:21 on Wall Street. I'm Denise Pellegrini. We check the markets all day long for you here at Bloomberg. And stocks did rise. Traders wagering that the worst of the banking turmoil has now passed, although gains kind of paired in afternoon trading after that Russian fighter jet had that encounter with the U.S. drone over the Black Sea. Investors, though, in the end, managing to shake off some worry about the biggest American bank failures since the 2008 financial crisis. Stocks really surging at the end. The Dow up 336 points. More than 1%. The S&P 500 up 65 points. That's 1.7%. The NASDAQ up 239 points, and that is more than 2.1%. Crude oil futures, though, sharply lower, down 4.3%, $71.56 a barrel right now. That's as investors look at today's CPI report showing the rate of inflation in February eased compared to January. That same report, of course, also fueling more speculation the Fed might lay off on aggressive rate hikes. We're even hearing a couple forecasts for rate cuts next week, so that contributed to the overall optimism, but not about crude oil. Regional banks broadly higher. First Republic up almost 27% today, though still about half its value of a week ago. Meta shares up 7.25%. Big job cuts there, 10,000 more job cuts on top of the thousands it's already cut. Plus, Meta is also doing away with taking back jobs it was advertising, 5,000 other open positions. And Apple up 1.4% amid sort of a pullback at the iPhone maker. Apple is slowing the pace of some bonus payouts there. And just a little bit more about inflation. Argentina February inflation. We think we have it bad here, right, with our 3, 5, 7, 8% worries. Argentina February inflation coming in at 103%
David.
year on year. Yeah, Damien, what do you think?
I'm sorry, they keep turning my microphone off, Denise. It's just all on me. And I forgot the
at
question
home,
now. I'm just sitting here, trying to get things.
Argentinian inflation.
Oh, good.
It's crazy.
I don't even think you could keep those in the same sentence. For me, in Argentina, it's going to be about the elections that are coming up at the end of the year.
Yeah, we're watching it with you, Damien. And that is our Bloomberg Business Flash. Back over to you guys.
All right, so appreciated. Denise Pellegrini there. All right, so what happens when the U.S. Transportation Secretary Pete Buttigieg drops by Bloomberg's Washington Bureau for a chat? Well, you can be sure that the subject of autopilots and the EV supply chain definitely come up. It certainly did. And with it, let's get to our Bloomberg Plugged In segment, our weekly look at the world of EVs. And joining us via Zoom from Washington, D.C., Keith Lang, Bloomberg News automotive reporter. Keith, good to have you here with Damien and myself. So what was top of mind when you guys sat down with the Transportation Secretary?
Well, there were several things that were top of mind. As you mentioned, we had a chance to chat with him about his agency's oversight of Tesla and his efforts to kind of work with them on this at the same time on boosting the number of U.S. EV chargers that are available. Tesla recently announced that they are going to open up some of their chargers to other automakers' EVs, and that was seen as a big development in the Biden administration's effort to quickly scale up the number of chargers we have. And we also had a chance to ask him about some of the problems that automakers are likely to run into as the rules for EV tax credits change and shift to focus on more domestic mining for electric vehicle batteries.
Keith, I wonder if you could, touch for me on, obviously China must have come up somewhere in your conversation. Talk to me about, what China means to the U.S. and certainly what it means to the race for rare earth minerals. I think EV sales topped $1 trillion last year. Obviously, there's a big competition for them. Is it refining? Is it mining? What is it?
Yeah, the secretary said that it's kind of a matter of both. He said that he didn't accept the premise that these minerals had to come from China for the foreseeable future. He said he's become a big fan of the term that the Treasury Secretary Janet Yellen has been using lately, friendshoring, where minerals are mined in countries that the U.S. has better relations with. But he said it didn't have to mean that there would be the only way that EV batteries could be built for the rest of time is for minerals from China.
Carol, I love that concept of friend shoring. I mean, who decides who is a friend of the United States and at what point in time? I mean, that's just amazing to me.
This is called controlling the narrative, friend
Right.
shoring.
Supposed to come from places that are outside of North America.
Are we seeing evidence of that, of friend shoring? I mean, are we really seeing with these new electric vehicle tax credits being passed by Congress, are companies really moving production here into the U.S.?
There have been some announcements that there are but they are more kind of midterm. Not, it's just not something you can pick up overnight and swap down a battery thing.
So what does it ultimately mean? And there's also been, this mining race and to do some mining here in the United States. I mean, what are the expectations? Is the administration backing that completely?
Well, the secretary did seem to imply that they are going to favor refining over the actual digging up of the minerals themselves, and that hasn't been formalized yet. But if they lean that way, that could be a huge development for automakers.
So, let's shift over to Europe. I mean, EU is looking to ban new combustion engine cars by 2035. I think the phase-outs begin in 2025. What is this U.S. focus, this proposed focus on refining of rare earths, mining, rather than mining, mean for the EU?
Well, the focus is the shorter-term goal that the Biden administration has laid out to have 50% of all cars be fully electric by 2030. And the longer range goal is to have all U.S. cars be electric by 2050, which the president and the secretary have said they think is feasible.
All right. So one thing I want to talk a little bit about is the autopilot, Tesla's autopilot. So Buttigieg, I don't know whether harsh words is the way to characterize it, but talk to us a little bit about the conversation that you guys had with him about that and where he went.
Well, we talked with him a bit about his thoughts on autopilot. We asked him about his personal relationship with Elon Musk, which he described as he actually had a lot of uncharacteristic pauses in his statements when he was describing.
Does he talk to Elon a lot?
He said he does. He said he's met him in person. He talks to him fairly regularly. He said he talks to him more often now that he's secretary than he did before. So he said he implied that he knew him before. And we'd asked him if he trusted Elon Musk and if he was a reliable partner in the push to scale up EV charging. And he said kind of pointedly that it's not the DOT's job to trust car manufacturers. It's their job to regulate them.
So, let me ask you a question, Keith. When you think of autopilot, or more importantly, you think of a full self-driving beta system, that's what Tesla's autopilot is, why do you have to keep your hands on the wheel and your eyes on the road?
Well, the DOT points out in everything they put out on this subject that there are no cars currently on the road that are capable of fully
running on autopilot.
Yeah, and there's been some polling out from AAA recently that shows that the number of Americans who say they're scared of driving technology is up in about 68% this year. It was about 55% last year, and the same poll showed that 22% of drivers think that technologies with names like autopilot should be capable of driving themselves.
Yeah, last time I learned English, autopilot to me says autopilot.
You flip the switch, you don't have to fly anymore.
It drives itself. What's interesting is, there's cars that aren't necessarily considered cars with autopilot. The technology, the safety technology has gotten to the point where cars do largely drive themselves. And you can definitely see it at play if you're on a highway in certain cars. So it's interesting. Net takeaway, I'm sure you guys got a nice chunk of time with the transportation secretary. Your net takeaway in terms of the administration's priorities when it comes to transportation overall, there's a lot going on.
Well, yeah, the secretary told us at the top of his remarks yesterday that he thinks that this is the best of times and the worst of times in transportation, kind of referencing some of the challenges that have been he's been experiencing in the aviation space with the Southwest crisis over the holiday and the recent train crash in Ohio. But he said he thinks that the problems are more temporary, and the solutions that they're working on can last longer. He's very confident in the ability to scale up this EV transition.
Keith, the Inflation Reduction Act, what kind of impact is it having on the U.S. auto industry and EV manufacturers in particular?
Well, it's very early, and the rules for the tax credit aren't final yet. They're not finalized. So
everyone's just sitting on their hands, or
the best of times and the worst of times.
There's a lot of uncertainty right now in the auto industry. They'd love to have these answers. They were expecting to have some of them in December, and the Treasury Department said that they needed some more time, and they pushed the deadline back to the end of this month. The credits are being applied. When the IRA first went into effect, the number of EVs that qualified was cut in half because immediately Made in North America provisions took effect. And then in the beginning of this year, there are now caps on the price of the car and on the income of the car buyer. So there's just a lot of technical things that the Treasury Department has to work out.
The devil's in the details, ain't it always? All right, Keith, gonna leave. We gotta run. Thank you so much, though. Keith Lang, automotive regulations reporter at Bloomberg News, joining us via Zoom from Washington, D.C. We've run out of time, but I really wanted to ask Keith about EV tolls, electrical vertical takeoff and landing aircrafts, because we're gonna talk about a company that does just that. That's coming up next. This is Bloomberg. All right, everybody, over to Nancy Lyon. She's in our D.C. newsroom with a check on world and national news. Hey, Nancy.
Thanks, Carol. The U.S. will not be deterred from flying in international airspace over the Black Sea. That's what White House National Security spokesman John Kirby is saying after a Russian fighter jet damaged and forced down a U.S. drone over the sea today.
We are going to continue to fly and operate in international airspace over international waters. The Black Sea belongs to no one nation. And we're going to continue to do what we need to do for our own national security interests in that part of the world.
Kirby called it unprofessional and unsafe on the part of the Russian pilots. Russia says its pilots did not use weapons or impact the drone. Well, President Biden is in California, where he's signing an executive order this afternoon to strengthen gun control. He's speaking in Monterey Park, where in January, a gunman stormed a dance hall and killed 11 people. U.S. authorities are examining the collapse of Silicon Valley Bank. Bloomberg's Jill Schneider has that story.
Bloomberg has learned the probes by the Justice Department, a U.S. Attorney's Office in California, and the Securities and Exchange Commission are in their early stages and include whether stock sales by executives violated trading rules. SEC Chair Gary Gensler said the agency is focused on monitoring for market stability and identifying and prosecuting any form of misconduct that might harm investors or markets. No one at the bank has been accused of wrongdoing, and the investigation could end without charges being brought. Jill Schneider, Bloomberg Radio.
New York Congressman George Santos is not letting an ethics investigation get into the way of his political ambitions. He filed paperwork today declaring his intention to seek re-election in 2024. Today was the deadline for him to declare. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:40 on Wall Street. We check the markets all day long for you here at Bloomberg's, and we did see gains on the day for stocks. Stocks rising as traders shook off the worst of the bank turmoil, thinking maybe it's past, and regional banks did show some solid gains, but not everybody believes in all this. Jim Bianco, founder and president of Bianco Research, says the problems with the banks aren't just going away.
The gates opened and money started flowing into money market funds. They started buying treasury bills because 5% versus 0.5%, then they started to move. And that has now created this liquidity drain at all banks. But the weaker ones, like a Signature or like an SVB, they're the ones that we found having the problems first. That bigger problem still consists.
And Bianco also says that regulators need to learn to deal with the fact that we can all take money out of all these accounts and drain these banks so easily just using our phones. In any case, as I mentioned, most investors seem to have shaken this off because the Dow closed up 336 points. That's more than 1% higher. The S&P 500 up 65 points, 1.7% higher. And the NASDAQ up 239 points. That is more than 2%, 2.1% higher. The yield on the 10-year ticking higher as well, but still lower than we were a week ago, 3.68% right now. NYMEX crude, one of the big stories of the day, down sharply, down 4.5%. That is as investors look at supply, and also at today's CPI report showing the rate of inflation in February eased compared to January. Now, that same report also fueling more speculation the Fed might lay off aggressive rate hikes next week. We're even hearing a couple forecasts for rate cuts next week. And last but not least, Meta shares getting more than 7% on the day. New wave of austerity there. Meta firing an additional 10,000 employees and doing away with 5,000 open positions. And that is a Bloomberg Business Flash. Carol and Damien, back over to you guys.
All right, so appreciate it. Denise Pellegrini there. While the world is focused on a shift to EVs, at the same time, startups around the globe, they are continuing to work on developing and refining the technology behind what the industry calls eVTOLs, or electrical vertical takeoff and landing aircraft. In that mix is our next guest, Beta. It's a builder of eVTOL aircraft and charging systems to move both people and cargo around. They count the Amazon Climate Pledge Fund, TPG, and Fidelity among its investors. So with us to tell us what they're up to and the outlook is Kyle Clark, founder and CEO at Beta. He's also a pilot, and he joins us via Zoom from Burlington, Vermont. Kyle, nice to have you here with Damien and myself. So tell us a little bit more about your company. I'm kind of obsessed with your website. And for those who are watching on YouTube and our streaming service, Bloomberg Originals, we'll get to see a little bit. But tell us about Beta.
Hey, guys. Great to be here. Yeah, Beta, we're a small aerospace company up here in snowy Vermont today, and we've been focused on developing electric propulsion systems initially for eVTOL aircraft, but as you know, we've now introduced a fixed-wing electric cargo aircraft and are launching that commercially.
So talk to us. I mean, how far away are we from seeing electric airlines really penetrating the market? A cargo, passenger, you name it.
Yeah, so I mean, on the technical front, we've been flying up here in the Northeast. We've flown halfway across the country. The technology exists to move cargo and people all over the country with electric propulsion. Our longest range flights are 336 nautical miles, and we just have to work through certification, which is kind of the essence of launching a fixed wing aircraft, where the certification path is more known than what a lot of folks are talking about, which is an electric vertical takeoff and landing aircraft.
So tell us what's involved. What's the infrastructure needed? Give us an idea. And to Damien's question, I mean, is there in the near future a point where we see a significant ramp up?
Yeah, absolutely. I mean, we're going to see electric on the ranges that make sense for regional cargo, regional passenger, 2025, 2026.
Wow.
And then it'll ramp as batteries improve every year, 5 to 8%. The ranges will improve commensurately, and then we'll get on the nipping of the heels of the regional kind of single aisle airlines, and in the 2030s, we'll start doing things in half the United States, and by the end of the 2030s, 2040s, we're going across the country in sustainable aircraft.
Is it a different type of infrastructure that's needed?
Yeah, absolutely. Look, we know that there's a lot of charging networks that are required to be put in place. We put a charging network that reaches from here in Vermont down through New York out to Arkansas. We are putting in systems, about 55 of them down the East Coast and across to Texas, mostly at airports right now, a few of them off airports. But you know, from an infrastructure perspective, aircraft carry a lot more energy than cars, and to get their charging time down into the sub-hour region, the charging power levels have to be significantly higher. So we have to bring in new charging technologies, higher rate charging, kind of like a supercharger on steroids, and we place those at airports. And then there's some amount of infrastructure within the air traffic control system, especially as we move into the vertical takeoff and landing domain, to manage increased traffic, especially in urban environments.
Kyle, do you think that, you know, like similar to cars, they have hybrid models where they run on, you know, on gasoline as well as electric? I mean, is that an option going forward for the industry to try and get, you know, those passenger miles up and get those cargoes, you know, those cargo planes, you know, further along?
Yeah, absolutely. There will be hybrid aircraft. There's kits that we can put onto our aircraft that we're using that are hybrid. Those will be stopgaps to get to all electric. I mean, look, aviation is a huge contributor to climate change right now, and if we don't do anything about it, all other forms of transportation have gone electric, as you noted in the introduction. You know, bikes, cars, scooters, trucks, trains, marine, and it's aviation's turn, and we operate, you know, kind of in a cognitive dissonance in the sense that we are operating on 1960s technology that prioritized performance over efficiency. And therefore, our carbon emissions in aviation is kind of disgusting. So there's this huge bow wave of technology and opportunity that electric aviation can overcome. So hybrid will get us close, but the reality is working through the regulatory challenges and the introduction of this new technology, it's not a technological challenge. And to introduce hybridization, you're introducing two new technologies at once. Here, it's actually easier to just go straight to electric.
Well, Kyle, you know, I just have to say this, you know, and I do want to focus on the fact that, you know, this is electric aircraft we're talking about here, but the fact that it takes off and lands vertically, to me, is just awesome and fascinating. And the impact of that on, for example, airports, right, and runways, and the amount of land that you need in order to, you know, kind of have one. I mean, do you see that being a structural change over, you know, the next few years into the future?
Yeah, absolutely. I mean, it's just fundamentally transformative of how we access the Z dimension in our world, right? Right now, we have to go through an airport predominantly to go up. Electric propulsion is very, very power dense. The electric motors are small and powerful relative to their gas kind of brothers, yet the batteries are relatively low energy dense. So short range, vertical takeoff and landing aircraft, they kind of get us away from the three most annoying things in aviation, which is the noise, the fuel, and the airports. Nobody likes any of those things. So the market just gets really big really quick. And even in a cargo application where you can avoid trucking things in vans and unloading and loading them and increasing the time in transit and the human touch time by just going point to point, it is not just a replacement for one tool, it's a replacement for multiple tools.
Right.
And that's why everybody is so excited about a huge TAM that we open up with vertical takeoff and landing electric aircraft.
All right, so give us an idea, then that means everybody's knocking at your doors to line up orders. So give us an idea of who you're partnering with, major airlines.
Yeah, I mean, so folks like the largest helicopter operator in the world, Bristow, they're one of our launch customers for both CTOL and then VTOL aircraft. The Air Force, the Army, United Therapeutics, which is a medical company that moves organs and tissues and medical products, UPS, we've got Air New Zealand that's starting cargo, moving to passenger. They're starting with the CTOL and we'll go to VTOL with them. There are airlines that I think can't be announced publicly yet that are working with us.
But you're talking to some of the majors?
Oh, absolutely. Yeah. I mean, look, there is an insatiable desire for sustainable aviation, and we're trying to get there with SAF, sustainable aviation fuels. But everybody who really cares about the world and the environment knows that electric is the right step for aviation, and all the majors, they care about it. And they just know that the technology is not quite ready for what their main lines run, but they're all looking for these secondary kind of introductory points. So when it comes to replace their main lines, they have an acute knowledge, the training, the infrastructure that you talked about in place for the airlines.
All right, we got to run. Kyle, look forward to future updates. Come join us again. Kyle Clark, founder and chief executive officer of Beta Technologies, joining us via Zoom from Burlington, Vermont. Carol Massar, Damian Sassow, you ready, right?
So cool. He obviously hasn't been to the New LaGuardia Airport. I love it there.
Your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. We're checking all the news, all the company news here for you on Bloomberg Radio. Credit Suisse is in the headlights. A report finding material control lapses after an SEC prompt. The chairman taking a pay cut. Executive board foregoing bonuses. But CEO Ulrich Körner says he is convinced his long-term turnaround plan for the company will be effective.
I'm fully convinced of the strategy. We are executing at pace. We have the right team. And, that's why we said in October, it needs radical change. The bank needs to be changed. And we said it's a 3-year transformation. And you can't come after two months and say, look, why is not everything done?
And Körner speaking to us there today with our Francine Lacqua. Bloomberg Shanali Bosick is one of those, though, for whom this interview raised a bit of an eyebrow because of Körner's unwillingness to really talk about what was happening at the present.
It was interesting watching the interview because Francine started to ask questions, but he kind of shunned them away immediately to answer what he wanted to answer, which was, we are not the same thing as Silicon Valley Bank, and we are not as worried about outflows as most of the market is. But clearly, a lot of the market has been and is worried about Credit Suisse and its ability to bring in customers.
Bloomberg Shanali Bassick reporting, and turning from financials to tech. Meta shares closing more than 7% higher. The company announcing it is cutting 10,000 jobs and doing away with 5,000 currently open positions, not open anymore. And those are the company stories we're following this hour. I'm Denise Pellegrini. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Massar along with Damian Sassauer on this Tuesday. Let's get a check on the latest world and national news. For that, we're over to Nancy Lyons. She's in our Bloomberg 99.1 newsroom in the nation's capital. Hi, Nance.
Thanks, Carol. National Security Council spokesman John Kirby is responding to what he calls a dangerous incident today in the Black Sea when an unmanned U.S. MQ-9 military drone came in contact with Russian fighter jets. A collision damaged the rear propeller of the drone, and that forced the U.S. to bring down the drone.
This MQ-9 was operating in international airspace over international waters and posed a threat to nobody.
Kirby says the Russian pilots acted recklessly and unprofessionally. The incident could lead to unintended escalation. Russia claims the U.S. drone was breaching a temporary airspace regime that Moscow established for special military purposes. Well, President Biden is announcing new actions on gun control today. He's speaking right now in Monterey Park, where massive shooting occurred earlier this year.
This executive order helps keep firearms out of dangerous hands, as I continue to call on Congress to require background checks for all firearm sales.
Biden says he wants to move the U.S. as close to universal background checks as possible without additional legislation. As the nation's smaller banks feel the impact of the federal takeover of two of them, the role of regulators is also coming under scrutiny.
Congress voted with the support of both parties to ease the requirements on all but the banking heavyweights and is unlikely to backpedal, Representative French Hill said in a Bloomberg interview.
We have a robust regulatory system with plenty of rules on banks of all sizes. What we need to see is vigorous supervision of those banks by their primary regulators at all stages of the economic cycle.
Congressman Hill said both federal and state banking regulators were not looking hard at the risks the failed banks were taking. In Washington, Irv Chapman, Bloomberg Radio.
Ryan Reddington has won the Iditarod 50 years after his grandfather co-founded the sled dog race across Alaska. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carol and Damian.
All right, Nancy, thank you so much. Bloomberg Business Week brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Your small to medium-sized business could qualify for up to $26,000 per employee if you kept them on payroll during the pandemic. It's simple and easy to see if you qualify. To learn more, just head to getrefunds.com. As you know, March is Women's History Month. Every day this month, we are celebrating significant moments in women's history. So with your installment for this Tuesday, March 14, 2023, let's check in with Bloomberg's Lisa Mateo.
On this day in women's history in 1969, Barbara Jo Rubin becomes the first female jockey to ride and win against men in New York. She piloted Bravey Galaxy to the finish line in the third race at Aqueduct. The month prior, Rubin had become the first woman to win a race in the U.S. at Charlestown Racetrack in West Virginia at the age of 19. Rubin began riding when she was a young girl to strengthen her legs after contracting polio. She told the New York Post she fell in love with horses after watching National Velvet with Elizabeth Taylor.
I want to be a famous rider.
But not everyone was thrilled with her passion. Before making her debut in Florida, the male jockeys refused to ride against her and threatened to boycott. Despite her winnings, Rubin's career was cut short by injuries, and she was forced to retire after riding for less than a year. That's today in women's history. I'm Lisa Mateo, Bloomberg Radio.
All right, Lisa, thank you so much. Carol Massar along with Damian Sassauer here in our Bloomberg Interactive Broker Studio, getting ready for our next hour of Bloomberg Business Week. What are you thinking on this Tuesday?
I'm thinking these markets need a vacation. I need a vacation from these markets.
Sorry, we got 3 more days to go, and then we got the lead up to the Fed meeting.
Got to be easier places to make money than this market.
Well, I know. It's certainly keeping everybody on its toes, and I do wonder when the Fed lays out its new dot plot, gives us some insight about what's on their radar, and ultimately what they do do we calm down or do we get a little bit more stressed?
And don't kid yourself, we have more this week. I mean, we have the ECB on Thursday. I mean, there's more central bank activity ahead. So, guess the verdict is out.
It's a global thing, global inflation
It's a global thing.
and global monetary policy. All right, don't go anywhere. Carol Massar, Damian Sassower coming back on the other side of this hour. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio.
All right, everybody. Hi, everybody. Bloomberg Business Week continuing this hour, live from the Bloomberg Interactive Broker Studio, streaming on YouTube and Bloomberg Originals. Carol Massar, along with Damian Sassower. Coming up this hour, we're going to hear from Bridgewater CEO David McCormick. He's going to talk with David Weston about the collapse of SVB and the future of greater bank regulation. I feel like Congress has a lot to do. We'll see where this stacks up in terms of priority.
Yeah, no, I'm really excited to hear that. I mean, Bridgewater, obviously, they've got an axe to grind in this market.
All right, we're going to talk about that. We're also going to talk about the other bank that collapsed this past weekend that was old school until it wasn't. And then we're going to tell you about the free IRS TurboTax competitor that may be closer than you think. We'll get into that. And then we've got the author of The Battle for Your Brain. First up, though, let's get a check on the day's trade and top business stories. Here's once again Denise Pellegrini.
Hey there, Carol and Damian. Thank you so much. We check the markets all day long here at Bloomberg. Right now it is 5:01 on Wall Street. Stocks closing higher, partly on hopes the Fed might lay off those rate hikes soon and maybe even cut, although that could be a long shot. Phil Camparelli, JP Morgan JPM Asset Portfolio Manager, tells us he is in the camp of those who think the Fed might have to lay off those rate hikes.
If the meeting were today, the Fed would be absolutely tone deaf to move rates higher.
Tone deaf, according to Camparelli. And that Fed meeting he is talking about is next week. We'll be tracking it all live for you here on Bloomberg Radio. Others, though, still focusing on the regional bank crisis, blaming the Fed for that. Ethan Harris, head of global research with BofA Securities, says the Fed hiked too sharply after waiting too long to hike. And he says this is what happens after a central bank gets too lax on inflation fighting.
Now we're seeing a massive catch-up by the Fed. And of course, financial accidents happen when you're hiking rates very fast. And so some of this is a legacy of the Feds and other central banks starting too slowly.
Yeah, but investors overall may be banking on the Fed, maybe easing off those rate hikes. The Dow up 336 points at the close. The S&P 500 up 65 and the NASDAQ up 239 points. Regional banks among the gainers. First Republic closing 27% higher. The yield on the 10-year right now, 3.69%, ticking just a tad higher. COMEX Gold, a little bit lower. Really, the big story today, NYMEX crude down more than 4.64%. And shares of Facebook parent Meta among the gainers on stocks up 7% after announcing 10,000 job cuts. That's on top of the ones they already previously announced, and also canceling another 5,000 open positions on top of that. And that is a Bloomberg Business Flash.
Actually, I'm a little early this year.
Me too. I'm always late. But...
I know, me too.
All right, well, for many, the idea of filling them out and getting them done may stress you in a big way. But for some real stress, talk to the tax prep companies such as TurboTax, which are facing a free competitor courtesy of the U.S. federal government. This story in the upcoming new issue of Bloomberg Business Week on newsstands later this week, already online at Bloomberg.com/businessweek and on the Bloomberg. Let's get to it. Ben Steverman is with us, Bloomberg News wealth reporter here in our Bloomberg Interactive Broker Studio, along with the editor of Business Week, Joel Weber. Joel, very timely, right?
Yeah, I mainly want to just know if Ben Steverman listens to the Beatles while writing about the IRS.
I should.
Yeah. Would that help with your productivity? I don't know. Just on repeat, single song. Repeat. So it is tax season, and that makes us think about obviously April 15th coming up. And,
yeah.
If you haven't started it yet, that's kind of why we wanted to write about this story because a lot of people who are doing their taxes between now and the end of the year are probably going to use TurboTax. That has been just a juggernaut in the DIY tax world for decades, really. But in other countries, the government actually has options for you to use your taxes.
I had
It's
no
just
idea.
not quite so here, right? So Ben, why does the U.S. not have its own version of a free TurboTax?
Well, one answer is TurboTax, and Intuit, the tech company that owns it. This is a cash cow for Intuit. They've used it to fund an acquisition spree over the last decade or so, and they hire a lot of lobbyists in Washington, D.C., and they've been fighting for a couple decades to prevent the U.S. from offering its own tool so people can just log on and say, okay, how much do I owe, and then click accept and pay the money. There was a bunch of agreements and things that prevented the U.S. from doing that because TurboTax lobbied for that. But a lot of that's collapsing now, and they're facing a potential threat from the U.S. government.
Okay, and that is actually rooted in the Inflation Reduction Act, which includes, as we write in this story by you and Brody Ford, nearly $80 billion to modernize the Internal Revenue Service. That's more than, you don't need $80 billion to make some software, by the way. That's bigger than just software, right? What else does that number potentially include?
Well, the $80 billion that the IRS is getting, most of it is for enforcement, hiring new auditors. This is an agency that's been just eviscerated by budget cuts. It has huge technological issues. It has 1960s software languages that they're operating our taxes on. It's way behind. But one thing that they slipped into that bill that Elizabeth Warren really has been driving is this idea that they're going to study whether to offer their own tax prep, basically government tax prep. And that study is due in May.
So, Ben, let me ask you a question. Isn't it a conflict of interest for the U.S. government to provide individuals with tax advice and also to collect taxes from them?
That is the argument that Intuit makes.
Are you a lobbyist for Intuit? Oh, sorry. No. I know you work for us.
I'm all about third-party independence and transparency, Carol. You know that.
I know.
And the other argument they make is that the tax code is really complicated.
Yeah.
But in other countries, the tax code is also complicated, maybe not this complicated. And there are a lot of people with very simple situations. You think about, well, I have a pretty simple situation. I wish it was more complicated. I wish I had tons of capital gains to claim every year and a home that I owned or whatever. But for me, it's mostly just a W-2 and a 1099 or something. And for those people, that's actually TurboTax's sweet spot, just the very simple situations. And part of the goal of the tax prep companies to fight this is to say, oh, it's very complicated. We need to help you. I mean, in some cases they do. They do offer good help, but in other cases it's pretty simple.
So is it likely to happen? I mean, the company's been warning, right, for a while?
Yeah, and it just does seem like the Biden administration is getting serious about this. Janet Yellen at a hearing last year said that when they get the funding, she'd like to do this. She's the Treasury Secretary, so she's in the driver's seat. And they hired an advisor to help with this, and we looked through some of her research, and she thinks not only is this a good idea, but that the most expansive version of it is a good idea, that you really need to do something that will be like pre-populated with your information. So you could log on to the IRS, see what information they already have about you, and then you can make sure you don't miss some income that comes in from something maybe you forgot. And so it can spot mistakes and stuff.
Okay, so I said something that was incorrect. I said April 15th. It's actually April 18th. You get a couple extra days, courtesy of me.
There's a weekend in there or something?
Courtesy of me, yeah, exactly. So April 18th is your tax deadline this year, PSA. Okay, so in the history of the United States government doing software, let me tell you how that doesn't go. It doesn't go well, Ben.
Yep.
Why should the U.S. government attempt this feat when, by the way, I think you said this already, but a lot of the IRS software is rooted in the 60s?
It's a good question.
Is that like Cobalt or is it like?
Yeah, I think that might be it.
X's and ones on a piece of paper?
It's literally like
X's
the
and
Kennedy
O's?
administration this stuff was first programmed. It's a good question. One thought is eventually the IRS, eventually the government will catch up. So you think IRS only just implemented like email interface with taxpayers like a few years ago, and obviously email had been available to like businesses for decades. It's sort of impossible for me to imagine that eventually there will not be an IRS app that you could log into. The question is it going to come next year or is it going to come in 2040? We'll see.
Yeah. Well, to that end, though, I mean, this is a serious part here because I am thinking of the Obamacare rollout and how flawed that was, and also what the government learned out of that experience. So how much of that experience could inform what happens on the tax front?
I think that is informative. Another thing that really informs the government on this is the pandemic and how the IRS really kind of scrambled to get out those stimulus checks. Basically, now the IRS is in some ways a social service agency. It was providing these child tax credits and stimulus, and it moved pretty quickly doing those things, surprisingly so. And they screwed up a few things. They gave money to people that didn't deserve it, but like. On the whole, I think that the IRS has been learning a little bit more, and they have some contractors that are helping them to really ramp up.
And I mean this in the most polite way possible. But why do we even care about this? 42 million people used TurboTax Online in 2022. Why is the government looking to change the status quo? And I agree with Joel, the amount of money and everything to get up to snuff for the IRS to even be able to do this, it's just mind-boggling. Why don't they just subsidize the cost of people going to Intuit and using TurboTax? I mean, wouldn't that be cheaper?
Well, that was the scheme for the last 2 decades, that basically Intuit agreed to provide free tax filing to about 2/3 of people. And that whole scheme is called the Free File Alliance. Only 4% of Americans were using it. Eligible Americans were using it. And you can basically say, well, that means there isn't a demand for people to save money. Or you can say, what people have said is that TurboTax was basically tricking people into using their paid service of $100 or so rather than using the free service. And so you need somebody who's in this marketplace that has the interests of taxpayers in mind, not just a profit motive.
Right. It's definitely free until you actually have to pay your taxes, and then it's not free. But maybe the service in the middle.
Good point.
You know, it is worth mentioning. There is a chart that grabbed my eye in this story, which is how much Intuit spends on lobbying. So what else does this company do, and what kind of force have they been able to implement on their behalf in Washington?
Well, they've hired basically this huge stable of former advisors to powerful people. Someone who worked for Nancy Pelosi, someone who worked for Mitch McConnell, and they're not just lobbying on this issue, they're lobbying on other things. But the other thing they were able to do and get away with is buying up a competitor who was emerging, a company called Credit Karma that had started to offer completely free tax filing. They bought up that company and really just stopped the momentum of that product. They did have to divest it, and it's now part of Block, which is the Cash App owner. But yeah, they've been able to really fend off both competition and regulation for decades.
You know, we've spent a lot of time talking to the CEO of H&R Block, Jeff Jones, and they have been trying to branch out beyond the tax, working with small business, but covering other things and really building out a financial platform. And I wonder, maybe not to the extent of Intuit, but similar space. And I think, are they seeing the writing on the wall that eventually the government's going to do this? I just wonder, if that's come up a little bit.
I think, I don't think this is an existential threat to these companies. Because I think there are a lot of people that still want hand-holding. They still want to either sit across from someone or have someone they can call on the phone and walk them through the process and use better software than the U.S. government is likely to offer.
Yeah.
So I think that H&R Block and TurboTax will still have a role to play. The question is, how big a role is it, and can they continue to grow, and can they use that to expand into other areas and bring in customers? It's a good customer acquisition strategy to offer taxes.
I do want to bring in the Code for America bit, because I thought this was interesting. What did you learn from the conversations with them in this?
Well, this is a nonprofit that's been working on the government tech issues we've been talking about, and they were arguing that the government should offer not just a tax site, but like sort of a one-stop shop for benefits and all the other things that governments offer. And so they put together this mock-up. I'm not sure how realistic it is, but we'll see.
Okay. U.gov maybe? That would be the my bid for a
But you
URL.
think about innovation disruption, right? You think about the way government things are handled. If you've ever spent, and I have, on waiting to talk to an IRS agent,
Waiting to get a driver's license.
There's stress, and it's just doesn't work. It's not like the 21st century. So you do understand that there's stuff to be done, and it's curious to see how far they go and kind of the upgrades.
And Carol, let me just add, I mean, this isn't just about getting your taxes right. This is also about protecting the most sensitive data that consumers and households have at their disposal. And I don't even think the government has even thought about what would happen if there was a breach of that, right? I mean, maybe they have, but I can't even imagine, the punitive, whatever damages, whatever, that they'd be exposed to in such an incident. So it's really quite amazing. I mean, from big tobacco to big tax.
So this is going to go great. When are we going to see this government site?
Oh, man. I mean, it does seem like the Biden administration is serious about this, and they want to do it, but it could be just that the IRS is like, no, we can't. Yeah. It's not going to work. It's possible.
Yeah. I think it's going to be Herculean. And I made that joke about this $80 billion that is earmarked for the IRS. Boy, it could take, not billions, but maybe close to it to actually bring a free product to market.
And they have so many other priorities. Where do you put?
Go get the money.
Up until recent, they have all hands on deck on the phone, so apparently it's easier to get in and talk to someone. But people were waiting on the phone for 3 hours at the end of last year. This is tax pros. These are people who are getting paid by the hour to wait on the phone. It's gotten really bad.
And I do think, just from a strategy perspective, that $80 billion, it's like, can you go make sure that we have inflow here? We're trying to get tax in. And that ultimately, exactly. Yeah. I would have to think when they prioritize, that's probably higher up on the list than just the software.
Can I just
Although
say,
the software is a part of that.
If there's any IRS regulators or anybody listening here, I love the IRS. I think you're up to this challenge. My name is Damian Sassauer. Thank you.
My name is Ruth Brown. All right, we're going to leave it there. Ben, thank you so much. Really appreciate it. Ben Steverman, wealth reporter at Bloomberg News, here in our Interactive Brokers studio, along with Jill Weber, the editor of Bloomberg Business Week. This story in the upcoming new issue of Bloomberg Business Week magazine.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 5:21 on Wall Street. We check the markets all day long for you here at Bloomberg. Stocks finishing higher. Investors betting really that the worst of the regional banking crisis is now behind us. While at the same time, the Fed may pull its punches, they hope, on inflation fighting because of skittishness and banking concern. Also today, inflation data showing inflation eased in February, at least compared to January by some measures, although it certainly still persists. The Dow closing more than 336 points higher. That's more than 1%, almost 1.1%. The S&P 500 up 1.7%, 64 points, and the NASDAQ up more than 2.1%, 239 points higher. Shares of home builder Lennar higher right now in the after-hours session, up almost 3%. Orders beat estimates. And Lennar is also raising its guidance. Executive Chairman Stuart Miller citing a strong economy and labor market, and also citing strong demand due to growing households and family formation, and the old story of a chronic supply shortage in the housing market. And Miller also says that February's spike in interest rates did have a slight impact on sales negatively as buyers assess the possibility of current interest rate environment being the new normal. But he says it was short, and mortgage rates have slipped this week. The yield on the 10-year right now, 3.69%. NYMEX crude plunging down 4.64% today. And that is a Bloomberg Business Flash.
All right, Denise, thank you so much. Carol Massar along with Damian Sasshauer here in our Bloomberg Interactive Brokers studio on YouTube and, of course, on Bloomberg Originals. So I have to say, Damian, we were thinking about this. One of the conversations we've all been having following the collapse of Silicon Valley Bank was the uptick in social conversations ahead of the bank's takeover and how that might have contributed to the bank run on SVB. It's just kind of part of the narrative. We're living in this increasingly digital world with nonstop data collection. Everything we do, everything we buy, everything we say.
Everything we think.
Right? And we willingly contribute to it, or don't even realize the data dump that we keep doing. I came across one measure, the world generating some 2.5 quintillion bytes per day. I don't even know
what a quintillion is.
It's just gigantic. So with that in mind, let's bring in our guest, Nita Farahani. She is the author of The Battle for Your Brain, Defending the Right to Think Freely in the Age of Neurotechnology. She's professor of law and philosophy at Duke University, founding director of the Duke Initiative for Science and Society. Delighted to have with her here via Zoom in Durham, North Carolina. Nita, welcome to Bloomberg Business Week. Carol Massar with Damian Sasshauer. So tell us about what is the battle for our brains.
It's been waging for a while. First of all, it's so nice to be with you here today. But The Battle for Our Brain is a book that talks about the next step in data commodification, which is commodification of our brains. So that's already happening in many ways, as all of the different platforms that we're on create psychogenic profiles of us. But there's more coming, which is the coming age of consumer brain wearables. People are used to wearing already Fitbits or Apple Watches that have sensors that are embedded in them. What they don't have yet, although some people use them already, are sensors that track their brain activity and decode what's happening in their brains. And that's what's launching now is multifunctional devices like earbuds and headphones and watches that have neural interface pick up and decode brain activity.
Nita, some of the items you address in the book, I mean, for me...
Wait. Are you telling me, so if I put on...
They're reading your brain right now.
Wait, so if I put on earbuds, Bose earbuds or something, you're telling me they're picking up brain activity?
Not today, but they will. So the, kind of next, basically like every major tech company from Meta that is coming out in early 2025 with a watch that the primary way that you'll interact with their AR glasses is neural interface. It'll pick up brain activity as it goes from your brain down to your wrist. Or, companies like Neurable have headphones where they've partnered with a major headphone manufacturer, like your Bose headphones, that's in the cups that go around the ears, they have sensors that pick up brain activity. And, the kind of goal for most of these companies is to make neural interface the kind of primary way that you interact with the rest of your technology. Like eventually you might not need a keyboard or a mouse, but until that day, you'll be able to track your brain activity for focus and attention and mind wandering and health metrics. Things that you couldn't do before suddenly will become possible and will also become possible for companies and governments. And so the battle for your brain is the kind of rush to this field to see who can really hack and track the human brain.
So, Nita, you mentioned brain biometrics and deciphering, all that's going on up there, but some of the items in the book that you mentioned, I mean, it's straight out of Minority Report. I feel like Tom Cruise. I mean, talking about arresting individuals for even contemplating murder, not even committing it. I mean, if that were the case, I mean, I've been arrested a long time ago. But I mean, how far away are we from having technology that can effectively read people's minds?
Well, what I say to people is it depends on what you think your mind is, right? So if you think of your mind as literally the inner dialogue that you're having, I think it's a long ways before these types of technologies will decode that complex thought. But already with the technology today, your basic emotional levels, your reaction to everything from pictures of political candidates that might be able to suss out what your political biases are to if your mind is wandering when you're at work and your employer asks you to wear one of these neural devices that track your fatigue levels or your attention or your engagement or your boredom. It's already possible today. And the technology even enables probing the mind for information that's there. And so you mentioned Minority Report, which I talk about in the book, and I always talk with my students about, but it's already being used by law enforcement around the world to interrogate criminal suspects for recognition of a crime scene detail or a murder weapon or something like that. So it's really one of the things I hope to do with the book is to just document kind of example after example of what's already here and how much of the brain can already be decoded and how much of it is already in use already.
So with any technology, there's the good, the bad, and the ugly. What's the upside to this? It can't all be bad, or is it all bad?
No, it's really not all bad. I mean, right, so first of all, I think in the hands of individuals who have control over their own brain data, suddenly the one area of our bodies that's the most important aspect of our well-being, our brains, becomes accessible to us. So, your ability to actually start to track brain metrics and metrics of well-being and health and to know what's happening in your own brain, including, by the way, how well you pay attention or focus if you're working from home or working in the workplace, or what your optimal hours are, or how you meditate effectively to bring your stress levels down. There's a lot that these technologies can do to empower individuals, but it all depends on who has access to what's happening in your brain. How is it used or how is it misused? And that's the kind of balance that we really have to be striking now. That's what this book is about, is a call to action to say, we're standing at a fork in the road. There is this major inflection point at the deployment of this technology as all of the major tech companies come out with these products and devices. And we have choices to make that could set the terms of service in favor of individuals to make it something that's empowering, not the dystopian or Orwellian possibilities on the other side.
Nita, are people using brain biometrics to handle real-world problems and diseases? I'm thinking dementia, Alzheimer's. Are there new technologies and treatments that are coming to market that can impact that?
Yeah, there's some really promising ones. There was, in the research for the book, I came across a company in Israel who are in clinical trials for the possibility of detecting epileptic seizures an hour before they occur. That could be incredible for people who suffer from epilepsy, or, the ability to be able to use it for depression. There's already some companies that are using it to provide low levels of electrical stimulation that can be transformative, or neurofeedback for people who have ADHD. They can use the devices to be able to train their brains to have better concentration and focus. And in some head-to-head studies against using drugs, the neurofeedback is very favorable. So there's a lot of potential health applications and ways in which this can be transformational for humanity in good ways. There's just also the dystopian possibilities that we have to safeguard against. And those aren't minor because, what you think, what you feel, it's so fundamental to who we are. Having that inner space of mental privacy and freedom of thought is so critical that we just can't get it wrong this time. We can't
know what
trade our
is
brain
anymore.
data.
I feel like
Well, but you've always thought you had that at least, right? You thought you at least had your
my
mental
thoughts,
privacy.
right? Well, Nita, in a related topic, So then how do you, because you obviously study, this I feel like falls under your purview. When you think about the work that Elon Musk is doing with Neuralink, and he wants to build this brain chip interface that can be implanted that might help disabled patients ultimately move or communicate again or restore vision. How does this, and we've got about a minute left, how do you think about that?
So, I have a chapter dedicated to these implanted technologies. And while I think it'll be a long time before a healthy person will choose to have implanted neurotechnology, it's just not safe enough for somebody who doesn't need it. The possibilities already are transformational for people who have everything from neurodegenerative disorders like ALS to be able to communicate again, to being able to move and have independence to interact with other technology. I'm very bullish on what those companies are doing and developing and how thoughtfully they're trying to develop the technology. There's real risks, but there's huge upside in that space, and it could be, incredible for so many people.
I have to just say my brain hurts a little bit because I'm trying to understand. There's a lot going on in our world. And
I'm thinking that the government's listening to me through my earbuds.
No, it's fascinating. Nita, hopefully you'll come back soon and we can continue this conversation. Nita Farahani, she is professor of law and philosophy at Duke Law School. Her book out is The Battle for Your Brain, Defending the Right to Think Freely in the Age of Neurotechnology. I do feel like when it comes to the brain, the human body, we're still learning so much.
Oh, absolutely. And Carol, hopefully they're not listening to my brain and wondering how I'm going to cheat on my taxes. I'm sorry, IRS, if you're still listening. I would never do that.
All right, let's get a check on world and national news. Nancy Lyons in our 99.1 newsroom in Washington. Hey, Nance.
Thanks, Carol. Russia is now responding to an incident that happened over the Black Sea earlier today. Russian fighter jets collided with a U.S. drone, forcing U.S. officials to crash the drone into the sea. Russia's defense ministry says the jets did not use any weapons. The Pentagon's Brigadier General Pat Ryder says the Russian pilots did, however, display extremely unprofessional behavior.
Fighter aircraft dumping fuel in front of this UAV and then getting so close to the aircraft that it actually damaged the propeller on the MQ-9.
Ryder says while intercepts are not unusual, what sets this one apart, as he says, was the extremely unsafe behavior of the pilots. President Biden says he's taking new steps to reduce gun violence. Speaking in the California community of Monterey Park this afternoon, where 11 were killed in a mass shooting back in January, he says he's signing an executive order until Congress acts.
My executive order directs my Attorney General to take every lawful action possible to move us as close as we can to universal background checks without new legislation.
Biden met with some of the survivors and those who lost loved ones in Monterey Park. U.S. authorities are said to be examining the collapse of Silicon Valley Bank and whether it involved misconduct by officers in the trading of stocks. Former banker and current Republican Congressman French Hill tells Bloomberg there were warning signs about SVB.
This bank grew very, very fast over the last 2 years, and that is usually a huge red flag to supervisors. And perhaps they could have intervened and helped the management team steer in a much more safe and sound direction.
Again, Arkansas Congressman French Hill. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it's 5:40 on Wall Street. We check the markets all day long for you here at Bloomberg. I'm Denise Pellegrini. A lot of green at the closing bell today, especially compared to yesterday. Ira Jersey, chief U.S. interest rate strategist for Bloomberg Intelligence, says the bank failures signal the end of major Fed tightening, but he says don't expect a cut, at least not yet.
I think that the Federal Reserve will hike 25 basis points and then say that, we're ready to step in to be the lender of last resort, as is our mandate, and we do care about financial stability. But with inflation still running at 0.4 a month on the headline inflation, there's very little reason to think that the Fed's actually going to cut.
And even though Jersey does say the Fed won't cut it, he's calling for that quarter-point rate hike. Others do say that the Fed may halt the rate hikes, especially because of all the problems with the regional banking crisis. And today's CPI showed inflation in February, at least by one measure, eased compared to January. Green across the screen, as I mentioned, for the major averages. The Dow up more than 1.1%, 336 points. The S&P 500 up 1.7%, 63 points. The NASDAQ up more than 2.1%, 239 points higher. The yield on the 10-year ticking higher on the day, 3.63% right now. NYMEX crude down more than 4.6%. And investors rewarding Meta management for their new austerity. The Facebook parent cutting another 10,000 jobs and also shutting down 5,000 positions that are currently open. All this as CEO Mark Zuckerberg gets ready to go on paternity leave for the birth of his third child. And that is a Bloomberg Business Flash.
Bloomberg Wall Street Week. David Weston speaks to the top names in finance and economics, taking on the week's biggest issues on Wall Street.
All right, everybody, back on Bloomberg Business Week. Carol Massar along with Damian Sassower. As you know, stocks soared as traders wager the worst of the banking sector turmoil has passed, although we did ease off our best levels of the session. And to be fair, we really are still figuring out what comes next, any other shoes to drop, which brings us to our brand new Wall Street Week daily segment today, in which Bloomberg's David Weston caught up with former Bridgewater CEO David McCormick. They talked about the impact of the Silicon Valley Bank collapse and on the need for regulation.
What's happening within the SVB right now and the regional banks, I think it's indicative of a different problem, if I could say that, which is you've had 10 years of reckless behavior, excessive spending, which has been accelerated over the last 2 years under the Biden administration, where we're spending well beyond our means, and excess in terms of low interest rates. And those two things have created an asset liability mismatch. That got reflected and clear to all the moment the Fed jacked up interest rates. The purpose of that obviously was to fix the problem that they had created with inflation, and you have Silicon Valley Bank of the banks, probably the most terribly mismanaged. And so I don't look at the Silicon Valley Bank as indicative of any sort of reflection on our tech industry in general. I view it as an example of a poorly managed bank that was terribly regulated by the San Francisco Fed and a broader macro problem.
You mentioned that at least apparently there was some mismanagement at Silicon Valley Bank. One of the themes in your plan of renewal is less regulation, not more regulation. How do you square that with what we're seeing right now? By the way, with Silicon Valley Bank, but also I could even extend it to a train derailment in Pennsylvania and in Ohio.
Yeah, well, listen, there's no doubt that the government needs to play a role in protecting the safety of our citizens in very targeted, thoughtful, balanced ways. And so East Palestine's a great example of that, where we certainly don't have the right regulatory regime, and the government needs to play a role. By the way, it's also an example of where, and this is what I saw on the campaign trail with many Pennsylvanians, where there's a whole part of our country that's being left behind that people don't even show up when there's a train wreck. And so that whole situation is indicative of a misguided level of government involvement. But on balance, the government's been far too prone to be proactive with regulation and far too not eager enough, I guess, to roll back.
All right, that was former Bridgewater CEO David McCormick with Bloomberg's David Weston. You can hear more of that interview this Friday on Bloomberg Wall Street Week with David. That's at 6 p.m. Wall Street time on Bloomberg Radio. All right, so one more story that Damien and I wanted to get to because it is certainly related to all of the bank worries over the past week. And while Silicon Valley Bank has garnered much of the attention, let's not forget that there was another bank that collapsed this past weekend. Isn't that amazing? Like, it's 3 banks, right, that really, in the past week. We're talking specifically about Signature Bank, now the 3rd largest bank failure in the United States ever. So let's get to it because our team has been all over it. Joining us right now is Sally Bakewell. She's Bloomberg News America's finance team leader. She's here in our Interactive Brokers studio. Yeah, Signature Bank, I feel like it's not getting its love when it comes to those that have collapsed. But tell us about this. You guys describe it as an old school bank. Tell us a little bit about it.
Yes, and just to begin with, as you note, basically we're less than a week on from 3 banks collapsing, so that's pretty impressive.
Has it been a crazy, I mean, you've covered the banking sector for a long time. You know, we keep comparing this to GFC, the Great Financial Crisis. Most people say it's not the same thing, but, you know, what has been coverage like for you guys?
Yeah, it's been, I think, the abruptness and the swift nature of all of this and how fast it snowballed within hours in some cases has been the real shocking thing. And how banks that looked like they were going to be fine very quickly, the sort of events and the psychology of all of this overtook really everything else that seemed quite rational. So it's been a pretty, striking week.
All right, so tell us about Signature.
Yeah, well, I mean, you're right. It's sort of this old school, outer borough, scrappy, traditional, at sometimes controversial bank. You know, it's kind of was known for being, you know, not having any hierarchy. Its executives, Joseph DePaolo was the CEO, and Scott Shea was the co-founder. They one of them ate their lunch at their desk. There was sort of mocking of people with, you know, these highbrow Ivy League educations, and it was there for the sort of overlooked businesses, the overlooked industries, and unfortunately, it succumbed to a similar fate as Silvergate and as Silicon Valley Bank. Following a run on the lender on Friday, we reported today that about a 5th of its deposits fled the bank, unfortunately, and regulators decided over the weekend that they would close it.
So, you know, I have to ask you this, Sally. You know, Barney Frank, he's the former U.S. congressman. He helped draft Dodd-Frank. He's also a board member of Signature Bank. How did he react to the DFS putting Signature into receivership over the weekend?
Well, he was initially, I think, very surprised, believing the bank to be on a much more stable footing. And I think he was also surprised when we took to him today that actually they weren't thought to be on a stable footing, and actually the management, there was some criticism of management's handling of the bank, and that you know, regulators had actually lost faith in the firm's management, which is really strong language coming from the New York State regulators there. But you know, he had initially said that they would have been open on Monday, or would have been able to open on Monday based on their financial data and their liquidity, but it seemed not to exactly be that case. So it's a bit of a mystery still what exactly happened at the bank, which we are still trying to find out.
But go ahead, David.
No, I was just wondering what price they were marking their Dogecoin at, because from what I understand, Signature has quite a bit of exposure to the crypto sector. And, you know, look, I mean, let's be clear. From my perspective, Signature Bank, by the way, is a regional New York bank. I mean, you know, they've had dealings with the Donald. They've had aggressive lending against taxi medallions. They've had accusations of funding slumlords. But they've gotten through all of it. They couldn't get through the crypto crisis that just hit. I wonder if you could talk a little bit about that and how that impacted everything.
And just have about 25 seconds, 30 seconds.
In 25 seconds. Yeah, they had about 1/5 of their deposits from crypto, so it wasn't a huge amount, certainly not as much as Silvergate, which really did topple because of crypto. And it had some very big crypto clients like Coinbase and Circle. The New York State regulators say it wasn't to do with crypto, that it was closed. So we're not sure. Still part of the mystery.
Unbelievable. Can't wait till the movie comes out on Netflix. Sally Bakewell, thank you so much, as always. She's Bloomberg News, America's team finance leader. I don't know, have you gotten any sleep in the past week?
I logged off at 10 p.m. last night, which is the earliest it's been.
All right, Sally, thank you so much. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. We have some breaking developments on TikTok's. They were getting word that TikTok's leadership is discussing the possibility of separating from ByteDance. That's its Chinese parent company. This would be to help address concerns about national security risks in the U.S. This divestiture could result in a sale or initial public offering, we're hearing. It is considered, though, a last resort to be pursued only if the company's existing proposal with national security officials doesn't get approved. And this is according to people familiar with the matter. And even then, we're hearing the Chinese government would have to agree to such a transaction. Florida-based Lennar also making headlines out with better than expected quarterly results. Shares gaining in the after-hours session. Meta cutting 10,000 more jobs and doing away with 5,000 other vacant positions. And Dan Ives, senior equity analyst at Wedbush Securities, says Mark Zuckerberg is moving away from those ambitious plans he had for the metaverse after investors perceived the whole project was a money waster.
Look at the metaverse strategy. When you look at what they're investing on, it's good money after bad. And I think this is really, it's a pivotal time for Zuckerberg, but clearly you see a new Zuckerberg in terms of how he's acting, especially on the cost side, and that's why the stock, Wall Street's rewarded it.
And I'm speaking after those cuts Meta announced today, shares up more than 7%. And Apple pulling back a bit more as well in its employee relations, delaying some bonuses and expanding its current hiring freeze to include more roles. Apple shares also gained on the day. And those are some of the company stories we are following this hour. I'm Denise Pellegrini. This is Bloomberg.
All right, Denise.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, Bloomberg Business Week. Carol Masters, you know Tim is on leave. Damian Sassauer been with us for the last few hours. Bloomberg Business Week brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The sacrifices you made keeping your employees on payroll during the pandemic are not forgotten. Check the potential refund your small to medium-sized business may be eligible to receive through the Employee Retention Credit with no upfront costs. Learn more, just head to getrefunds.com. All right, coming up at the top of the hour, Bloomberg Daybreak Asia with Doug Krisner and Brian Curtis.
I was just listening to Denise break this news on TikTok, which is pretty significant given a lot of the regulatory concerns that there are in the U.S., the fact that maybe this company shares data with China and then the Chinese government, and the extent to which this kind of intersects with the whole surveillance thing. We've been talking about weather balloons, and we've been talking about all these ways that perhaps U.S. consumers are being monitored, or the U.S. as a whole is being monitored by China. This fits into that story. So we're going to be going into that. I don't have a lot of details on it.
Well, look, how could you mention China, Doug, and not expect me to weigh in here? I mean, we do have that activity data coming overnight, but for me, it's really going to be about what it's been about all year long when you're looking at investing offshore in any other market, developed or emerging. It's about carry. It's about nominal carry, because the best performers this year are those high yielders like Brazil, Mexico, you name it, and the worst performers from a currency perspective tend to be those low yielders, and those low yielders tend to come from Asia, where inflation is low and central banks aren't reacting as quickly enough.
Well, certainly that's the China story, but I'm going to pivot and go to Japan. Did you see what happened to the sell-off in Japanese banks and the yield curve, the control that the BOJ has put in place in that cap? We actually broke below that cap yesterday, I think by about 5.5 basis points, down to 25. Now, the cap that was put in place back in December was all the way up to 50.
Right.
So there's a lot of concern about the degree to which